Hello, everyone. This is Adiel Gorel, the CEO of ICG. And today I want to talk about the coronavirus. Everyone is talking about the coronavirus. Why shouldn't we? So we know about the big scare. We know about all of those events being canceled. We know that the Olympics may be canceled. Morgan Stanley released a 3-scenario possibility of what can happen to the economy. Scenario 1, 2, and 3, going up in severity. Right now, they think the likely one is scenario 2. The economy will take a hit, but it's not going to go into a recession. Anyway, that's what they think. Clearly, the fear is high. The stock market has been very volatile and went down quite a bit. And the Fed has already lowered rates to the point that the interest rates on mortgages are the lowest ones in history. So how does that affect us in the single family homes we buy as rentals? So people who feel poorer because the stock market is down are usually in the upper ranges of wealth and income in the country, probably the top quarter. So the kind of single family homes we buy in the middle of the country, in the Sunbelt states, brand new in good areas, and yet less than 200,000, maybe a little more than 200,000, those are squarely in the middle of the range of wealth and income in the country. So the buyers of the kind of homes we deal with usually would not feel the strong effect from the stock market. Strangely, even people who do are looking at real estate or rental homes as a portion of real estate as a good alternative to a stable investment that is not in the stock market, because right now to a lot of people the stock market seems scary. Another thing that we are seeing, we already mentioned, the Fed dropped its rates and now they are the lowest in history. On Friday, the mortgage rate for a 30-year fixed rate loan was at 3.29, the lowest ever. And best time to buy a home on the strength of the kind of mortgage that you get at least. What else do we hear about the fear regarding the virus? Don't leave home. Stay home. Everybody's talking about home. Is the castle, is the fortress, is the safety. So homes come into great focus. Combine that with the lowest rates in history and the income range and the wealth range of people who may not be affected much by the stock market. A good home could be a great thing to do for a regular family or for investors. Even when regular family buys them, prices will go up. So I don't believe the coronavirus effect will have a negative impact on the kind of investment that we specifically do. Buying brand new homes in good areas, in large metropolitan areas, in the Sunbelt states, putting a down payment, getting a 30-year fixed rate loan at the lowest interest ever, and then doing the hardest thing to do for a human being, nothing, while inflation erodes our fixed rate loans into the future and the tenants are paying it off. Even rentals are getting stronger because the portion of the population who didn't think of buying a home and they want to rent still are more likely to want to be home, to stay home, to seek a home. This is another opportunity to talk about why vacation rentals as investments are not a good idea. Many of you have heard from me that I think vacation rentals are not a good idea. You may not remember the last recession or the one before it, but when there is a recession or general fear, vacations are the first to go. Vacations are a luxury. Even now with the coronavirus fear, vacations are going away. So now you're very susceptible to those kind of trends. When you buy single family homes in a good area where families are going to live, where the kids are going to school on a long-term lease, like a 1 year's lease, that is not affected by those things. I hear some people saying, oh, I'm going to buy vacation rental, rent it on an Airbnb and I'm a genius. Right now, they are suffering. So I believe it won't have much of an effect. There could be an indirect effect. There could be materials that will be in shortage that come from the Far East and from other countries. There could even be a labor shortage. Those things affect the building of new homes. But paradoxically, shortages means supply becomes less, becomes constrained. Demand is there, in fact, even more now. So then prices could go up. In general, I think we should just keep on doing what we've been doing and not find an excuse to express the fears, especially the new buyers. Here's another excuse why not to do it, why not to get started. In many ways, things are quite good now. And while we will see what the future holds, buying single family homes for families to live in with these rates is a fantastic thing to do. We will discuss it more in an upcoming webinar, and I'm looking forward to seeing many more of you. Have a wonderful day.